In this video, I'll be looking at specific situations in the following markets that you see here. I'll be referring to the wave principle's rules, guidelines, and specific patterns, all in the context of identifying turning points for going long or short. We'll talk about entry levels, stop, target, and exit levels. We'll also discuss weighing the risk versus reward, and we'll look at what possibilities we can eliminate. This is the S&P 500 stock index. It's a daily bar chart, and we're going to start at this August low and see if we can count this wave structure, this advance, up through March 2005. We can count this as 1, 2, 3, 4, and 5. So this also is an impulse wave to the upside in the S&P 500. It may not be over. If we look at the internal structure of this final fifth wave, we can also count 5 waves, an impulse wave, 1, 2, 3, 4, and 5. And that gives us more evidence that this impulse wave is possibly ending, which means that we would have a reversal and prices would move to the downside. Just want to note a couple of things. Wave 2 is what we call an expanded flat. It makes a new price extreme right here, but it is not really part of Wave 1. Wave 1 ended right here. Wave 4 is a sharp zigzag. If we draw in our trend channel, it gives us a better idea as to whether this impulse wave has reached its end. And we can see that Wave 5 did not even get near the top of the channel. It ended somewhere in the middle, and price action is now turned down and looks like it's about to go through the channel. Let's look at some other relationships of this structure just to give you an idea of retracements. Wave 2 retraced about 0.618 of Wave 1, and Wave 4 retraced approximately 0.382 of Wave 3. So what all this information tells us is that our wave count is most likely accurate, and that will be a turning point, and prices will go to the downside, and we could take a position and set our stop above the termination point of Wave 5 for the next move after the completion of this impulse wave. And that is in fact what happened in this case. Prices did trend down, retracing this 5-wave advance in the S&P 500 index. This is a chart of the Russell 2000 stock index from late 2002 to early 2005. And I can label an impulse wave to the upside. Here's waves 1, 2, 3, 4, and 5. Although at this juncture, we're not sure yet if Wave 5 has finished, but we're going to talk about that in a few minutes. Wave 2, that's an expanded flat, and we'll talk about expanded flats later in this video, and Wave 4 is a zigzag. And if you look at the end of Wave 5, you see these little trend lines. There's a very interesting structure forming there. So let's look at that more closely. In Wave 5 of Wave 5, we see this structure, and this structure is called an ending diagonal. A diagonal is a motive wave. It's a 5-wave structure. But it has 2 key differences from impulse waves. One is that the subdivisions, waves 1, 3, and 5, subdivide into 3. They form zigzags. They do not subdivide into 5 like the subwaves of impulse waves. The other characteristic that's different from an impulse wave is that Wave 4 in the diagonal triangle overlaps the price territory of Wave 1, unlike an impulse wave where Wave 4 never overlaps the price territory of Wave 1. I can label these waves 1, 2, 3, 4, and 5. The diagonal is bounded by 2 converging trend lines, one that connects the termination points of waves 2 and 4, and the other that connects the termination points of waves 1 and 3. The diagonal gives us a strong signal of an imminent trend reversal that will be swift and will retrace the entire diagonal and possibly more. This diagonal is occurring in the 5th wave of this 5-wave sequence, so it is telling us that this 5th wave at higher degree is ending, and since this is also the 5th wave in the sequence that began, the impulse wave that began at that 2002 low, that is giving us a signal that the entire advance from the 2002 low is coming to an end and that we're going to have a major turning point to the downside. Let's take a closer look. We see here now, you can see the structure. Wave 1 is a 3, Wave 2 is a zigzag, Wave 3 is another 3, 4, and 5. And based on the diagonal, the risk now of going to the upside is small, and the reward to the downside is great because we know that after a diagonal terminates, as I mentioned before, the next move will retrace the entire diagonal and possibly more. Therefore, we can position to go short with great confidence. We can set our stop level just above the end of the fifth wave of the diagonal triangle, and as a price target, we can look for the origin of the diagonal triangle down here. So let's see what happened. Okay, we've broken out of the diagonal triangle. We've started to the downside. And if we fast forward, you see that the next move was a major move to the downside. It did retrace the entire diagonal. If we were still short at this juncture, this would be a good level to exit because now we have retraced the entire diagonal. The origin was over here. So the diagonal gives us a strong signal of an imminent and swift reversal. It is a distinctive pattern and different from impulse waves, as I mentioned before. We see diagonal in fifth waves of impulse waves and in C waves of ABC zigzags and flats. On rare occasions, you may see a leading diagonal in wave A or wave 1. This is crude oil in 2005, and again, we have an impulse wave to the upside. I can count this as 1, 2, 3, 4, and 5, and then we have this corrective structure, which I can label as an ABC. If you look at the C wave, you'll see a wedge-shaped formation. That is also a diagonal. Diagonal can occur in fifth waves of impulse waves and also in C waves of corrective structures, in flats and zigzags. Let's take a closer look at this diagonal. We have waves 1, 2, 3, 4, and 5. As mentioned before, the diagonal pattern gives us a strong signal that the overall pattern is ending and there's going to be an immediate and swift reversal. So in this situation, we can use this information to go long in crude oil at this juncture. You see the wedge shape of the diagonal, and if I go long in this area, I could set my stop somewhere below this final fifth wave of the diagonal in anticipation of the thrust out of the diagonal. As I mentioned before, the next move normally retraces the entire diagonal and possibly more. Therefore, we can set a target level for our position back up here where the diagonal began. And as you can see, if we move forward, we broke above the upper converging trend line, starting to make an advance. And we are now impulsing to the upside, and we have retraced actually more than the diagonal. The diagonal began here, and so we've gone beyond that point, and we could look to close our position here. So the diagonal in this case occurred in wave C of an ABC zigzag, giving us information to go long and expect to move up at least to where the diagonal began. I now want to look at examples of how we use the wave principle to trade when we have corrective structures. This is a chart of cash silver, 2004 and 2005. We have labeled this as the end of wave 3. And in the middle of the chart, after wave 3, you see this structure, a sideways structure, and that's called a triangle. More specifically, that's called a contracting symmetrical triangle. And the triangle has waves A, B, C, D, and E. Triangles use up time, and they give us important information about the next actionary wave, or in this case, would be wave 5. So let's look at this more closely. You see that I've connected the termination points of waves A and C and extended that line, and I've connected the termination points of waves B and D. You see now the shape and the contracting nature of the triangle, and that you see that the E wave has broken through the AC trend line. That does not invalidate the triangle, but what would invalidate the triangle would be if this E wave went below the termination point of wave C over here. That gives us information for setting a stop level to go long for wave 5 out of the triangle, because we could set our stop slightly below wave C. That's one way of setting a stop. We know that triangles precede the final actionary wave in the main trend. So at this juncture, we could position to go long in silver with a stop slightly below the termination point of wave C. And as you see here on this slide, silver broke out above the triangle, above that BD trend line, to complete its fifth wave in a 5-wave sequence. I want to look at another example of a triangle. This is the Dow Jones Industrial Average, 2004 to 2005. And we have here an ABC zigzag forming. We have a wave A here, which terminated. And now we have another structure. This also is a triangle. It is called a running triangle, and I can label it as A, B, C, D, and E. With a running triangle, wave B terminates beyond the origin of wave A. Because it is a triangle, wave E is the final wave, and I can connect the termination points of wave A and C to give us the AC trend line, and the termination points of B and D, and you can see the shape of the triangle, and that wave E has gone slightly below the AC trend line. That does not invalidate the triangle because wave E is still above wave C. And with this information, we know now that the next move should be to the upside to complete wave C. One of the things I want to point out at this juncture in the video is how, knowing the Elliott wave rules, guidelines, and patterns, we can narrow down the number of possibilities that can occur in the price action, which then gives us a very good risk-reward ratio to work with. In this case, since wave E looks like it's possibly finishing right here, we can set our stop below that or possibly just below wave C, because if this wave goes below C, it would invalidate the triangle, and we can prepare to go long for wave C. And in this case, the E wave actually went a little bit further right here, and then we thrust it out of that triangle for wave C of this ABC zigzag. Here's a chart of Dell Computer, and I want to start at this major low in 2001. We have an ABC zigzag, wave A here, wave B, and we're in wave C. And within wave C, I can count 1, 2, 3, and this is 4. This wave 2 is an expanded flat. In wave 4, we see this structure here. We see triangles in wave 4 and the B wave of corrective structures. Another thing I want to point out about triangles is that each of the waves, A, B, C, D, and E, are zigzags. One of the waves, usually wave E, can also be a triangle. And wave C is sometimes complex, meaning a double zigzag or triple zigzag. So let's look at this triangle in wave 4. This actually has a different shape and structure than the previous two triangles. The first triangle we looked at was called a contracting symmetrical triangle, and then we looked at the running triangle in the previous example. This triangle is called a barrier triangle. I've connected the termination points of waves A and C to form the AC trend line, and I've connected the termination points of B and D to form the BD trend line. Notice that the BD trend line is basically horizontal. The D wave goes a few cents above the top of the B wave, but basically horizontal. We call this shape, or this type of triangle, a barrier triangle, where the BD trend line is horizontal as price action bumps up against that line, forming a barrier, and the AC trend line ascends upwards in the case of a bull market, pointing in the direction of the main trend. Therefore, the barrier triangle gives us more information that we can use to take a position in the market. But let's step back a bit. This is wave 4. We know in an impulse wave we expect to see wave 5. We also know that the triangle precedes the final actionary wave and the main trend. So that gives us more information about going long here for wave 5. We have the E wave of the triangle hasn't quite reached the AC trend line, but the E wave can either undershoot or overshoot the AC trend line, as long as it doesn't go beyond the termination point of wave C of the triangle. And we also know that this is a barrier triangle, giving us more confidence that the next move will be to the upside, consistent with the ascending AC trend line. As in the previous examples, we could set our stop slightly below wave C, and we could position to go long. But let's see how we might set a target for that fifth wave of this 5-wave impulse wave in wave C. In triangles, we have Elliot's guideline of post-triangle thrust measurement. And what that is if we extend the AC and BD trend lines and connect them with a perpendicular line as shown here at the origin of wave A, that distance, when added to the termination point of wave E, gives us an estimate for the target price for the fifth wave out of this fourth wave triangle. And as shown here in this diagram, that distance, this level here is 29.5, and up here it's about 36.5. So we have a distance of $7, and the termination here of wave E, if that indeed holds as termination of wave E, is $33.85. So when we add $7 to $33.85, we get $40.85, or approximately $41 as a target. And so let's see what happened here. In this fifth wave for Dell, it got up a little over 42 at about close to 42.5. So about $1.50 beyond our target. But as you can see here in the final thrust, we had the thrust out of the triangle for wave 5, completing this 5-wave impulse wave in wave C. We used the information that we had about triangles and impulse waves and the structure of triangles to give us a good risk-reward ratio by narrowing down the number of possibilities, given the fact that we knew that this was a barrier triangle in the fourth wave position of an impulse wave. I want to look at this chart of Microsoft. This is a long-term chart, and we can count an impulse wave to the downside, 1, 2, 3, 4, and 5. And we could call that wave A, possibly of another A, B, C zigzag. But let's look at this B wave, this sideways price action. We actually can label this as a triangle. And we can see waves A, B, C, D, and E, although wave E may still not be finished. What's interesting here is, remember how I had noted that the C wave sometimes is complex. We have a complex C wave. We have a combination W, triangle X, which is A, B, C, D, E, and then wave Y for wave C of the larger triangle. I've now drawn in the AC and BD trend lines, and you see the shape of this long-term triangle. One characteristic of all triangles is that they use up time. And in this case, you can see the number of years that this has gone sideways. And if we go further in the price action, you can see that we've now broken through the BD trend line. We see that wave E did go a little further, overshooting the AC trend line, and then the price action reversed to the downside. Let's now move on to our last example. This is the NASDAQ Composite Index, and it's a 30-minute bar chart. We can label this price action as follows. We have an impulse wave to the downside, where we label 1, 2, 3, 4, and 5. 5 waves down. And then we have a corrective structure. We could label this ABC for wave 2. And possibly this price action here to the downside is the resumption of another wave down, a wave 3. So we could consider going short, but there's another possibility here that we know using the wave principle, and that is that maybe this corrective structure is not finished. We could have what is called an expanded flat. An expanded flat is a 3-3-5 structure, meaning a 3-wave structure for wave A, a 3-wave structure for wave B, and then a 5-wave structure for wave C. With the expanded flat, wave B goes beyond the origin of wave A, and wave C goes beyond the termination point of wave A. So we have to be cautious here, because there could be a very major move to the upside if this is an expanded flat. But at least we know now what our risks are, that this is not necessarily a very high probability to the downside on this next move. We must be wary of the possibility of an expanded flat. Okay, we did get the expanded flat. This is wave A, 3, wave B, a 3-wave structure, and wave C, a 5-wave structure, wave C going well beyond the termination point of wave A, wave B terminated below the origin of wave A. Now, if you had gone long, Let's assume that you had gone long in this situation and that you're still long. Would you know whether or not to exit your position at this point? Well, one way to weigh that decision is we know that with the expanded flat, one relationship between the termination point of the C wave and the A wave is that the C wave will terminate at a distance equal to 0.618, the length of wave A, beyond the termination point of wave A. And that comes into the level of 2357. This high here is at 2362. So that's pretty close. And we also can see the 5-wave structure here in the C wave. So in terms of our analysis of the expanded flat, that tells us that there's a good chance that that C wave did end at 2362 and that we're now proceeding to the downside in a major move. So if you were long in that situation, you do have information to tell you whether or not to exit at this juncture. Another piece of information that we have is one of Elliot's rules that wave 2 always retraces less than 100% of wave 1. And we see here that wave 2 in parenthesis has either come close to ending or has ended if we look at it with respect to the origin of wave 1. And if I carry it now forward, we did get a major move down. That was the end of that C wave. And so we have the labeling of 5 down, 1, 2, 3, 4, 5, an ABC expanded flat, and resumption of the downtrend after the termination point of wave C. Let's summarize now some of the major points we discussed in trading with the wave principle. We used the wave principle to identify major market turning points. We used it to set up entry, stop, target, and exit levels. We were able to weigh risk versus reward, and we were able to narrow down some of the possibilities by eliminating particular scenarios. We looked at the following structures: impulse waves, extensions, diagonals, zigzags, expanded flats, and triangles. Keep in mind that there are other Elliott wave patterns, but we just did not have the time to get into all of them. That concludes this video on trading with the wave principle. If you're interested in learning more about how to use the wave principle in trading situations, we have a number of resources at our website, including online courses that take you step by step through various trading scenarios. I hope you enjoyed this video, and thanks very much for your attention.